I'm gonna shoot you.
Yeah. Jumpin', them boys up to something.
Hey guys, what's going on? Welcome back to my channel. This is Pinnacle Trading here. Today we're going to take a look at how I learned to trade options. So before we start, this is my channel right here. We have the live alerts chat room link over here. This is where I call out my stocks in the chat room. On my entry, exit, it's completely free to join. So you can click the link right here or the link in the description to join the chat room. We also have our social media here, Facebook, Instagram, and Twitter. And the last one here is my Robinhood referral link. That's the free, no commission trading app. And I really love it. I use it every day for my trading. And that's the referral link where you'll get a free stock, and we both will get a free stock if you sign up using that link. And it's free to join, no minimum deposit, no monthly fees, no commissions. Okay, and if you haven't already subscribed, go ahead and click the subscribe button and the bell button next to it to stay notified of my future videos. So before we jump to what options actually are, this is a great site to study from. And this is how I taught myself. I read and looked through this site, and it basically shows you a simplified introduction to what options actually are, how they work in the market, how they are different from stocks, what they do, and types of options, and how to read the spreads, risks, and just a quick recap of everything that you learned over here. So basically what an option is you get to control 100 shares of one stock or ETF, whatever you're buying. So one contract or one option is you're controlling 100 shares. It has an expiration date, which you get to choose, and you get to choose how many options you want to buy, and it's a lot cheaper than buying stocks. That's why it gives you tons of leverage, and you can make a lot and also obviously lose a lot. But it's great if you're investing or swing trading. It really gives you that leverage if you don't have that big amount of portfolio to trade, or if you're just getting into trading and you want to try out options. You can also do calls and puts. Calls are basically long and put is basically short. So when you buy a stock, normally you're basically buying a call, and when you short a stock, which is advanced, that's put. So if you're going long on a stock or a call, you're making money when it goes up, and a put, you're making money when it goes down. And the premium is basically what you pay for the option or the contract, and premium varies by the expiration date and which stock you're getting and the volatility of it, how fast it moves, and just basically it differs just like the stock does. Before we get into more depth into options, I'll leave this link in the description and you can read up on this. You can also just Google what options are, or buy a book on Amazon and just read up on it. And that's what I did. I read a bunch of articles online, I did some practice trading, and you can use Thinkorswim for trading, and I'll show you how to do that in just a second. Before we do that, you want to see how profitable an option actually is before you buy it. Just so that you get an idea of how much you can make versus how much you can lose versus the time. So let's take a long call, which is bullish, so you're making money when a stock goes up. So let's choose Apple, for instance. So we type in the symbol over here. The symbol for Apple is AAPL. Let's get the price. I'm going to zoom in over here so it's easier for you guys to see, and gets you the current price, so it's 175.30. This isn't exact like Thinkorswim just because it's not connected to live data, because that's a premium feature that you usually have to pay for, but it shows you the most accurate price, and you're buying it and you select an option. So this is where you choose your expiration date. That's what these dates are, and this is your calls over here. So this is the bid and ask, just like a normal stock has, and this is basically the last price. So let's choose a date in around June. Right now it's March 19, 2018. So let's pick our expiration date in June. And let's look at the bid and ask over here. Let's pick in the money. That means it's at or below the current stock price or the strike price. That's another term used. So right now Apple is, let's look over here. Right now Apple is trading at 175.30. So that's what this shows, 175.30. So if you're buying any calls below that, then you're buying in the money. That's where this white area is. If you're buying out of the money, then that's gray area over here. It's good to buy in the money just because you have less volatility and risk. And I'll show you. Let's look at this example first, and then I'll show you the other ones. So first one, let's buy the 160. So it costs $18.70 per contract, so you're paying 100 times whatever the price per option is, because I told you before you're buying 100 shares, or that's one contract. So you pay 100 times whatever this price is. So the total cost will be $1,008.70, and then over here you want to come down and click profit loss dollar value, or you can look at percentage of entry. I usually look at this, and let's click calculate. So it'll load up and it'll show you this nice chart over here. So right now Apple is trading at 175.30. So say in May, by May ending 29th, it goes to 183. So you go over here, you go to 183, and then you go to May 29th. So you're making $442 from your, and that's going to be your return. That's 23.6% return on your investment. So you paid $18.70 and you're cashing out $23.12. So you're making $442. That's your profit right there, and that's almost 50%, close to 50%. Or sorry, that's close to 25% return. So when you're looking at something like that, and say Apple does really well, it has really good products and really good news, say it goes to 190 or 189, and you'll be making $1,039 in profit. So you can see how this leverage works out versus a stock, because if you're buying a stock, then you can only, if you're putting in about $18.70, then you can only buy really about 10 or 12 or 13 shares, and you're only making like $120 or $200 or even less, give or take. I'm just doing the math off my head right now for the video, but if you look at the 189 and versus the stock, you're making like 4 or 5 times more what you would actually make. So that's why options are great with the leverage, and you can see how much you can make versus the time. So there's decay on options. So when you look at it over here, say it's at 186 and you go further into the future, then it gets, your profit decreases. So that's where the price versus your expiration date and how much you pay comes into play. So say you're really bullish on this and you're buying out of the money, you're gonna know that it's going to 190, or you're just a big fan of it and you see really good growth potential on this. So let's buy about 9 of them, or whatever equals 1800 as before. So that's 7, right? That's close to about 1800. So say it goes to 189 again, you have less time for it to reach that price. So it has to go faster to reach that price, so you lose less amount of money, and that's less decay. So when it goes to 189 over here, then you're making 42. But say you think that'll go there faster, but in mid-April, let's say April 17th, then you're making about almost 3,000. You're making 2807 on that one. So you see how it works out for time versus leverage and how much you pay for it. So if you are paying out of the money, then it's gonna take less time for it to go up. So you have to be really bullish on it. And if you're buying in the money, then this green area over here, it lowers down, so you have more time for the price to go up. So you can just mess around on that. If you are completely new to trading options, then you can join my chat room completely free. I'll leave the link in the description, or you can click it on the YouTube profile page, and you can go over to options alerts over here. And today I'll call that a bunch. I just started trading options this week as I got Robinhood options access. So I will say the expiration date and the strike price, and if it's call or put. So today I got SPXL, UDOW, and QLD and AMD options. I usually pick them about in the money, and also I give it a couple months expiration date just so I can stay in and out of the market when it goes up and down. So you can check out the options alerts over here. And we also have Brian that calls out really good options. He's been a long-term investor and he makes really good long-term profits. So make sure to check out his alerts on there. And we also have an options watch list of so we'll post what we're looking at to buy in a brief description. And we also have an options chat where you can just talk about different ones. And today I got QLD call and I'm up about 11% on that one. So my strike price was 5.4. So I paid about $5.40 for that option, and it's up $60 already today. So that's about 11% return. I'm still gonna hold on this one as the markets are down right now. So this is just an example of how you can look at the options in the chat room, how we trade and how we talk about them. So it's completely free to join. I'll put the link in the description and make sure to check it out. So I'm going to zoom back out over here, and then we're going to head into Thinkorswim, and I'll show you how to buy a basic call option. So you can use Thinkorswim Practice. That's what I've been using, and it's been really great. It's real-time data and it works perfectly with options, stocks, futures, whatever you're trading. So let's go into trade. This is live. I don't have the practice account loaded up right now just because I have to log out and log back in. So let's look at Apple. So this one we looked at, let's go back to the in the money, 15th June, and let's look at 160, and let's say we're just buying one of them. It's going to cost you $18.70, and we go back over here, and it's June 15th, 160 call. That's what you need when you're looking at an option. So when you're buying a stock of Apple at 150.75, that's the price. But when you're buying option, you're going to state the expiration date first and then 160 call or put. Let's look at the Apple option buying over here. So June expiration, there's June 15th, and you're looking at the 160 call. So it's going to be right over here, 160. You want to see that strike price and expiration, and you come over here, look at the bid and ask. So 1840 and 1870, so that's $30 spread. So you can click on that and it'll load it up over here, and you set your limit price to buy just like a stock, and you click confirm and send, and then it'll go through. So that's basically how we buy an option. On the mobile, I found it a lot easier to buy it. On this, it's more data, more numbers, but you can simplify it however you want. So that's basically how we buy an option. You look at the strike price, look at the expiration date, and you buy in the money, out of the money. That's basically a call. And for the put, you do completely opposite. So you're looking at for it to go down, and you buy out of the money and in the money, vice versa. So this is a great site to look at options profit calculation, and that's optionprofitcalculator.com. You can also Google that, but I'll leave the link in the description, and you can look at Investopedia. You can learn about basic options on there. So if you like this video and found it helpful to you, go ahead and click the subscribe button and the bell button next to it to stay notified. Let's push this up to 2,000 subscribers, guys. That'd be really helpful. And share the video and leave a comment, like, and let me know what you'd like to see in the future, and leave any ideas in the comments. Alright guys, take care. I hope this helped you out. Thanks for watching.